G'day everyone, welcome back to Pete's Investing. June the 6th, 2023. This is the NASDAQ price analysis. We've got here the weekly and the daily. On the weekly, we're still in a bullish momentum primarily, and on the daily, it's broken down into a neutral. So let's have a look at these. On the weekly, the triple moving average of the price chart is bullish. Likewise, the CCI moving averages are in alignment and bullish as well, and that's giving us this bullish signal. So to be safe with trading on the lower time frames, we want to see those in a bullish momentum as well. However, on the daily, you can see there it's broken down into a neutral positioning, so be cautious about going long. Also, we've got this key resistance up here at 14,660. That was previously at this previous bar here at that level there, but we've raised it after the last couple of days. You'll notice also we've got this divergence on the CCI. It's a very slight, it's almost a flat divergence, very slight. If anything, it's very slightly raised, but it's a very flat divergence most likely. But here we've got a bullish divergence on the price chart, and the way these would work out is we draw a channel in that divergence range in this price channel. We put on the lower channel, we put at the lowest bar there, on the lowest candle, and then we have a potential target area at that in the Fibonacci range between that low and that high. The initial target range will be between the 38% and the 50% Fibonacci range, which is 1352 and 1316 as our initial target, and that's a secondary target. The reason I've got that in there because it sort of aligns with these potential diagonal trend lines, and by the time that may come back, if it does come back, I'm not saying it will, but if this divergence plays out and the price collapses and it breaks below this channel, then we're going to see it probably rest on one of these diagonal trend lines. So that's why I've got these two target areas. So that's on the daily. And on the hourly, again, that's just a leftover from the daily trend line. What we look at here is the backtest. So again, backtesting, this is the short period. The short programming backtest is the red, and the bullish backtesting is in the blue. You can see there the profitability, and currently the profitability for the short is declining because of this recent rise in the price chart. The way to avoid these drawdowns, we don't use stop losses. We average down, meaning we add to the positions as the price goes against us. The way to avoid these is to, again, make sure the weekly and the daily are aligned. So looking at the bullish programming first, back here around August 2022, if I zoom out to August, let me just zoom, make that a bit easier to read. So August 2022, you can see there that bullish program, you can see there was primarily short positions back there, and likewise back here is predominantly short positions as well. So again, taking no long positions to avoid this drawdown, and the opposite happens with the going short programming. So to understand how this potentially works, you want to make sure you access the links in the description below, subscribe to my Patreon page, and reference the weekly scans we do on stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.